And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. And there is an awful lot to unpack today. We're going to move right through that, get into where the broader markets closed, and take a look at some of this shuffling and shifting that's taking place beneath the surface. And as usual, it's all about interest rates, anticipation of where interest rates will be, Fed governors out speaking, citing that they will need to see many months of decreased inflation before lowering rates. And then also GDP numbers, they came in a little weaker than expected. So we're back in that period where bad news is good for the markets. We had core PCE data coming in today, and that also came in a bit lighter than anticipated. However, not the reaction you would expect. So let's not waste another moment. I do want to remind you, however, that next week we do have May employment data that's going to be released. That's quite relevant. And then also beyond that, the next FOMC meeting is taking place on June 12th. Let's go ahead and take a look at those markets. And here we are. This is a daily price chart of the S&P 500, and we were down just a little bit over 1%. A couple of notable items here is the fact that we had dipped into negative territory for that RSI, but we did close back above that, and that's all about this candlestick that was posted today. And you can see that we did get very close to that 50-day simple moving average. Buyers came in on the dip so that we closed in the upper reaches of the trading range for the day. And that is generally a bullish posting as it relates to these candlestick. But you do want to be aware of other momentum-related activity taking place. And first up here is the fact that we did get a negative MACD crossover. I talked about this in my midweek MEM Edge report because it can be significant. This black line down through the red, you'll see going back through this nice rally period, February into March, we did get certainly a number of head fakes, you may say, as it relates to that downtrend through the red line. But when you want to really pay attention is if we do get that RSI in negative territory coupled with that MACD crossover, and you can see what it could imply. I'm currently using this April period as possible precedents, so keep a close eye on these markets. From here, let's go ahead and take a look beneath the surface. We're going to take a look at the 11 underlying sectors within the S&P 500. We have an RSI indicator that's overlaid, and the sectors are in descending order. And let's take a look at some of this movement that I alluded to at the beginning of today's show. And first up, I did want to highlight the fact that we did see industrial stocks move into a downtrend. This is midweek price action. Today, a nice recovery rally, but we're not quite out of the woods yet. Also down here in this lower quartile, consumer discretionary. Now, I will share with you a look at the retail group, which is on the move higher, but the overall discretionary group is suffering. We're still in a downtrend there. As we move through these lower quartile areas, healthcare also entered a downtrend midweek. We were able to recover that. So this is really what took place last week for those of you that are frustrated, and perhaps you may have sold into some of that weakness to only see it come back into play. Do not feel alone. It was a very, very dicey period. We are going to, in the end, hopefully sort this out, because I do want to share with you that the technology sector was the worst performing. It was down 2.5%, but take a look. This is similar to the S&P 500. We rallied down to this 50-day simple moving average. Buyers came in and we closed above that 21-day high volume. Very bullish activity as we move through. I'm going to share with you just some hints regarding the haves and have-nots within this tech sector. And let's go ahead and take a look at some of these other areas that are down here in this weaker quartile, and energy would be among them. However, we'll get more into this in the next segment. I am going to share with you some of the areas within energy that are beginning to brighten. It was the top performing group on Friday. We're back above the shorter term moving average. Now, I would argue not quite ready for prime time yet. There is an OPEC Plus meeting that's going to take place on Sunday. So a lot of this could easily be traders setting themselves up for positive news. And by that, I mean production cuts that would increase the price of oil, but we'll get more into that as we move through. And then, of course, up here at the forefront, I talked about this last week, and that was the pullback that we saw among utility stocks. And as you may recall, I did suggest that this pullback would be a buying opportunity. And we did see a nice late week rally very close back to these prior highs, the move into some of these utility names, all about AI needed electricity and other utilities. Now, let's go ahead and take a look at other areas, because I do want to share with you that most of the sectors within the S&P 500 on this midweek period had entered into a downtrend, 7 of the 11. However, the late week rally that I've been alluding to did help bring them back into bullish positions, but not entirely bullish. Keeping an eye on that, of course, you want to be on top of that sector rotation, making sure that you're in areas that are experiencing strength, and then perhaps lightening up on those weaker areas. So from here, let's move beyond this view of the sectors. And we're going to take a look at ETFs that are very useful as far as really getting your arms around movement within the markets beyond those broader sectors and take a look. I mentioned to you that retail is on the move, retailers, and we can see this is XRT, the S&P Retail ETF, and it is now in the throes of forming the right side of the base. I'm going to share with you as we move through a couple of names that really moved to life this week amid earnings. And these retailers, they are the last to report their quarterly results. So this is quite notable that we're seeing bullish price action in an otherwise mixed market. Now, up here at the forefront, but certainly not having a good end of the week, and this is semiconductors. The semiconductor group overall did pull back, but here again, buyers did come in on the dip. So on this one-day bar, it is constructive. Now, always, and as usual, certainly from my work, you will want to have precedence. And taking a look back here at this peak in the semiconductor group in March, and be very aware of that price movement and the fact that we could see a pullback. We'll go ahead and take a look at Nvidia again here, because during this pullback phase, Nvidia did fall 20%. So it's really going to have everything to do with your outlook for your investments as to whether you stay in for any pullback, but certainly be aware of those negative metrics that tell you that they are poised to trade lower, but today's price action looking overall constructive. Let's go ahead and take a look at some of these other underlying areas. Small cap stocks ended the week flat above that 50-day simple moving average. Generally good. We want to see small caps at the very least not going down with this market. But let's go ahead and take a look at the lowest performing sub-industry group this week, and it is going to be software stocks. IGV, this ETF, was down 6%, all about earnings from Salesforce CRM. And this is going to have a lot to do with that have and have not that I talked about among technology and even drilling down within software names. Not all names are under selling pressure. Also up here, we can see Homebuilders having a late week rally, not quite ready. However, we do still have the momentum indicators in negative territory. This is more of note. And then we would be remiss to not take a look at the yield on this 10-year Treasury. We can see that we're in the throes of a rising interest rate environment. I talked about Fed governors speaking and the talk as far as interest rates, but we did end the week at 4.5%, up a mere 1% from the close last week. And I did mention we do have some more inflation data due to come up. And as we look at these rising interest rate environment, it's going to be critical because the really strongest period of particularly growth stocks is going to be in a declining interest rate period relative to as rates rise. This is that April pullback that we saw in semiconductors and other growth stocks. So from here, I also did want to highlight the fact that this week's price action, as far as the bumpiness going into midweek and beyond, it did push the volatility index up a bit. So we were able to close at that 14 level. It certainly elevated from this very low level later this recent month. But until we get up above this 16 level, I am not going to be concerned. It's more of note that if you are feeling that volatility, it is certainly out there. So from here, let's go ahead and take a look at those mega cap FANG or Magnificent Seven stocks. We did see a little bit of shifting around in this area as well. I did mention that I would highlight Nvidia and take a quick look, because when we talked about it, and I'm sure not everyone saw last week's show, so I'm going to dig in a little bit more, but when stocks really begin to take off, exhibit that really high momentum, you will want to add that 5-day simple moving average, which at this point is 1110 is where it's sitting. And we did close the week at 1095. So really close above that 5-day simple moving average. If we go back, take a look at historical precedent. Pullbacks to that 5-day will overall tend to be your buy point. Now, of note is the fact that Nvidia was able to advance after this gap up in February into the beginning of April, despite weakness elsewhere in semiconductor stocks. It eventually succumbed to that rising interest rate environment. This is that pullback that I mentioned. Again, use history as your guide. As Nvidia began to break back below these shorter term moving averages, 5, 10, and 21 day, eventually we did get that negative RSI. However, your first signal is going to be that MACD crossover. These are the kind of things that I talk about endlessly in my MEM Edge report. I'm doing a lot of work with Nvidia relative to Qualcomm in 1999 going into 2000. So also from here, I did want to talk about some of these stocks that had these big moves, both to the upside and the downside. Before I do that, however, one last look at Nvidia. And this is something that I shared last week, and that is using the longer term chart as your guide if you are in Nvidia for a longer term outlook. And what you'll do on this weekly chart, keep an eye on that RSI during this pullback last fall, and then this pullback more recently into April. The RSI did remain in positive territory, so you were able to stay with that. So from here, let's take a look at some of these companies that did report earnings and did not fare well. Beyond that, we would be remiss to not take a look at CRM, Salesforce. And as many of you may know, they are all about their biggest product is customer relations related and their software enterprise in that space. However, the company did guide lower by way of sales due to budgetary constraints for their products. So here we are with that gap down. Now, we did get a 7.5% rally today, and that was on the news that going into the open today, after yesterday's sharp pullback, CRM was the most oversold stock in the markets. And that was signaled here with this RSI moving this down close to that 15 level. So we are seeing an oversold bounce. It will be, of course, very interesting to see how this stock continues to shape up, because there was another company last quarter that pre-announced potential weak sales going into the remainder of the year, and that was Ulta Beauty. And here we are with a chart of Ulta and that gap down in response to management's lowering their growth guidance going forward. And take a look. We did have certainly rally attempts, and it was not until the company came out and released their earnings for this quarter. The outlook was pretty good, and they in essence redeemed themselves so that we are now emerging out of this overbought position. However, you will want to be aware of how this particular stock closed for the week. So here we are with a different view because really you want to have a good sense of where the stock closed. Ulta did get up as high as 420, but it closed down here at 400. So not ready for prime time. Also, we do not have those momentum indicators on the daily chart up here in positive territory just yet. So let's go ahead back and take a quick look at CRM. We did get a nice sharp rally today, but take a look. Your momentum indicator is still very much trending downward. Oversold bounces will not always evolve for more upside, so you will want to keep a close eye on that. Now, moving on, taking a look at some of these retailers that really came in today and gapped up on above average volume. First up, we can take a quick look at Burlington, BURL. Nice gap up into a base breakout and a continuation rally. I'm pointing this out because this MACD is just now getting into positive territory, pointing to potential further upside. I'll share with you a name that I shared with you last week that went on to advance beyond that base breakout. And again, at that time, last Friday, that MACD was just getting into positive territory. I've added that 5-day simple moving average, which has since caught up with the price, and that is your new guide for any pullbacks. Let's take a look at Gap GPS, another stock today that gapped up not quite into, actually, we did get that nice base breakout. And again, that RSI just getting into positive territory, highlighting that because if we go back to this prior quarter in response to earnings, you can see this base breakout shaping up and that MACD quite early in its advance. So Gap looking certainly very interested. Now, when we look from here, taking a look at these software names, I did share with you CRM, certainly a lot of other names that came in with numbers recently. This is Workday, WDAY, gap down. And despite being very oversold, the buyers are just not coming in. So this particular area, when you look at Workday, for instance, CRM, they are going to provide enterprise software, either relating to back office or consumer relations, but I did want to share with you that not all names in this group are under pressure. This is AI. The company provides software that helps with infrastructure for AI-related projects. And you can see this is a gap up. The company did come out with numbers and then progressed higher from here. And management actually gave a statement, and they did cite Salesforce and other companies stating that they are fine companies. But with, for instance, AI, when they are dealing with those that are putting together the budgets, there does not seem to be those budgetary pressures on AI-related expenditures. So that's awfully good to know, because when we look at other AI-related names, you want to have a sense that they could continue to advance despite budgetary weakness in the corporations elsewhere. This is a data storage company. It's NetApp, NTAP. You can see this nice advance continuing to new highs. The company did report their earnings on May 30th. But of note is the fact that unlike companies that may be reducing their growth outlook, this particular company actually raised their dividend, and they put out a share repurchase program. In other words, they are doing just fine. Cash flow growth is in place. So this is what you're going to be on the lookout for. I talked about those have and have nots among the technology sector. Now, from here, also, I did want to share the fact that today's rally, we talked about that close in the upper reaches of the trading range for the broader indexes. But of note, if you were to take a look at the underlying stocks that drove that price action, it was primarily a lot by way of bottom fishing. Starbucks, you can see up a nice 2% today as the stock attempts to reverse its downtrend. Other downtrend or bottom fishing took place in Boeing, another name that got hit quite hard last week on negative news, and another name that had that nice 3% rally. McDonald's, this is a name I talked about last week as being very, very weak also very oversold. You can see it was up almost 3% on the day. So while we did see this movement, it's akin to short covering in a way, because these very overbought names are seeing buying coming in. This is Disney down and out, up about 2% on the day. Now let's go ahead back. I talked about energy and the fact that it was the top performer today. I did want to share with you an ETF, and I do quite a bit of screening. These ETFs are very helpful as far as staying on top of where there may be upside price action. And this is IEO. It's the U.S. oil and gas exploration, and it looks very similar to the overall energy group. You can see today's nice 2.3% rally, not quite ready yet. Of course, keeping an eye on that OPEC meeting on Sunday. We will want to see a move up into positive territory for this RSI, and then have that MACD crossover move into positive territory to confirm. From here, I'll share a couple of names that are on my watch list within this energy group. And here we are. This is Devon. For me, I do want to have names that have experienced and have shown that they have that capability to experience outperformance, such as this February into April period. Here we are with DVN, again, not quite ready. We can also take a quick look at FANG. Both of these are exploration and production stocks within energy. And here we are. We can see we're just up here at that 50-day simple moving average, but take a look. The RSI is now in positive territory. We've had that MACD crossover, on the lookout for that to move into positive territory. But again, that overall group dynamic is going to need to be in place before I would put money to work here. And that's it for this week, everyone. I hope you have a great weekend. Go ahead and hit that like button if you like what you've seen, and I will look for you here again next Friday.